To another Southbank investment bulletin. Now, this week I'd like to just talk a little bit about China, because what's going on there could have global repercussions. Now, I remember about 10 years ago being in Shanghai and chatting with a couple of I guess some of my wife's acquaintances, and one of them was an investment banker. And he was very well positioned in selling products into the trust firms. Now, when we talk about trust companies in China, it's not what we would consider to be a trust company in the rest of the world. So that's the first thing. When they talk about trust, what they're really talking about are guaranteed loan products. So it would be more akin to what we would refer to in the Western world as private lending. So what the trust companies were effectively doing was gathering money from very wealthy individuals and excess liquidity inside companies, and then investing it with very high guaranteed yields into mostly property. And that was just another way. So, I'm very clear here that it's just another way of how the property companies were accumulating assets to fulfill their promises to keep the ball rolling on the development of property and this expansion of the bubble and the liquidity. So uh, when the trust companies uh, were largely stopped from doing that, and there were tighter rules introduced, well, then a lot of those companies, the property companies, they went off and they started issuing US dollar denominated debt out of Hong Kong. And within the space of about 18 months, they issued about $500 billion worth of debt in US dollars. And then the Chinese government became rather worried about that because the size of the liabilities. Now, what we're starting to see is some of these trust firms are missing payments. So that means that the very well positioned and wealthy individuals that gave them money aren't getting it back. And this, I think, is in large part it's tied to some of these property developers. So then let's just pay attention to what some of those charts look like. And they look awful. So Country Garden Holdings is still trending towards zero. Let's just remember that not all that long ago, 2018, it had accelerated higher. It was trading around 17. Now it's at 84 cents, and it's still going down. Now this is a private lender. Now, when we look at one that has more cash relative to its overall liabilities, long for group, well, it's not quite as low, but it is still trending downwards. So this is still a sector that's under a great deal of pressure. Then, of course, you have other property developers like China Vanke. Now, this one I would consider to be royalty in terms of Chinese property developers because it is partially state-owned. So it's unlikely that it's going to go bust, but that doesn't mean it can't go lower from here. So this is having a knock-on effect on Hong Kong shares. And the Hang Seng gapped lower in early trading here on Sunday night. So let's just think then about what's going on in China. Uh, they took the opportunity during the pandemic when everyone was locked down to restrict liquidity to the property sector. They decided that with full control over the population that this was the best time to try and prick the housing bubble. And there is the very real possibility that they're going to be unable to reflate it, and that if they were to, then the volume of cash that would need to be printed in order to support the property market would be gargantuan in size. So another way to pay attention to what's going on is to monitor the renminbi. Now this is shown inversely. So this is the dollar rising against the renminbi, and it gapped higher as well in here in early trading. So we do need to just look at lots of back history just to highlight the fact that there have been plenty of times in the past, particularly between the 1980s and 90s, when there was a really profound devaluation of the renminbi. It wasn't really until Deng Xiaoping started to come into power that the renminbi appreciated, and then they just fixed it for a while. So this, to me at least, looks like a base formation, and that there is ample scope for the renminbi to trend lower. Now, this is problematic because China's a massive consumer of commodities, and copper prices are rolling over. Now, when I wrote my book, Crowd Money, I talk about three different trend-ending characteristics. And the second one of those is called a massive reaction against the prevailing trend. And let's just pay attention to what happened in copper. So prices got all the way down to the 2015 lows in 2020, and then they rallied exceptionally impressively and more than doubled in the space of only about 18 months. And then we had a significant loss of uptrend momentum. Instead of just going up, they started going sideways. And then we had a failed upside break. It popped to a new high and couldn't hold it. And then it came down in really quite a profound manner. And that was a warning signal. But then we got this massive reaction against the prevailing trend. Now that is so quick, and this is emblematic of what you see with a Type 2 top. It's that it comes down so fast that people start to then think, well, golly, that must be the end. And there's definitely a tendency for people who wish they had bought on the way up in 2020 through to the middle of 2021 to think that this was a bargain. So they come in and buy. But a lot of people, particularly leveraged traders, would have been stopped out. And they'll be a little bit less enthusiastic about buying. So then you get a ranging phase, and now prices are rolling over again. And if China's property sector doesn't get significant assistance soon, well, then there is the real possibility that we're going to see industrial resources prices coming down hard. And this also is important for the iron ore price. So iron ore prices popped on the upside in 2020 and 2021, and then collapsed in the latter half of 21, and now they're rolling over again. Now, I think a reasonable measure of the performance of those mining companies is the BlackRock World Mining Trust. And it also popped on the upside in 2020 and has subsequently been ranging. The price today is pretty much where it was at the beginning of 2021. And there was a big downward dynamic on Friday, and now there's the possibility that it could break on the downside. So this is also, I think, particularly relevant when everyone is talking about this incredible boom or secular bull market that's about to erupt in the commodities sector, and that there's going to be a chronic shortage because of all this investment that's going into the renewable energy sector and the drive towards net zero. Well, all of those predictions assume that demand from China is going to be predictably growing. But what happens if demand in China, instead of growing, goes down? And that this massive oversupply of steel and processing capacity that has been used to feed the bubble in Chinese property, what happens if that just becomes completely useless? And that instead demand in China collapses. Now, that would mean that commodity prices would absolutely crater. And then we wouldn't be talking about inflation anymore. There would then be the very real risk of a global deflation. And of course, then we would see interest rates coming down, and not just coming down in China, but coming down everywhere. And of course, then that would also be the fuel to reignite a lot of risk-taking behavior. Because let's not forget that just if we look at UK yields, we've seen this enormous run-up in yields over the course of the last 3 years because inflationary pressures have been so pressing. Well, it's going to be difficult for a lot of the pressures on inflation that the UK has to evaporate because wage demand growth is picking up. But if we get a global issue like China exporting not just a little deflation, but a lot of deflation, well, then that is going to be felt absolutely everywhere. And we could easily see inflation peaking and coming down fast in the UK, in the USA, and everywhere else. And that could be a very significant bullish environment for the risk assets that did very well during the period of global quantitative easing, and most particularly the technology sector. So what's happening in China is going to be exceptionally important for commodities, but it's going to be perhaps even more important for risk assets just about everywhere else. And I think with that, I'll leave you for this week and wish all the best to all of you.